this is why you have to know what the banks and institutions are doing because they control the market. At one point in time, these guys were long, I'm circling it right here, 468,000 contracts. Ever since then, they've been offloading their position. They've been selling this thing down to 441, 335, 268, all the way down into negative territory. Now we're going into minus 20,000, minus 81,000, all the way down into minus 155,000. What do you think this is going to look like on a chart? It's going to be going to the downside because the banks and institutions are offloading their position, shorting this market. So it's going to go to the downside. These guys control the markets. So you need to understand what their position is. You don't want to be caught on the wrong side of the market. You want to look back at what drove this market to the upside because this is when it started falling. We just highlighted this area when it was long, 468,000 contracts. They started selling this thing. Well, before that, it was rallying nonstop for like the same time period that it's been falling. So what was it doing back in August, late August, early September, when it was all the way down here? Well, you can see right here, they were net positions right here in the middle column. I'm circling it with my cursor. They were back here on September 17th, September 24th, right? They were minus 66,000. They started buying this thing, right? Offloading their short positions. You can see it right here. On the second column, 400,000, and they started offloading their shorts. So they're closing their take profits. They're adding to their long positions, right? It's like a double whammy. They're selling their shorts and they're adding to their long. So they're double buying this thing. And this is how fast it went from minus 60,000 down into neutral territory, into plus 100,000, into plus 200, 300, all the way up to 468. And this drove this whole market to the upside from here all the way to the upside up here where they started closing off their longs. And now this is where we are now here, right? So this is what we're going to go over. We're going to go over several trade reviews that I have for you so that you can understand how to read this data and implement it on the charts. I'm going to show you where to get this data from on this site because it covers all the commodities and all the currencies, gold, silver, the S&P, corn, crude oil, the dollar, the euro, pound, Aussie. It covers all the currencies. So I'm going to share with you on this how to read it. And we're going to go through analysis and do all this. So you're going to become a pro at this by the end of this video. I appreciate a like so far. If you haven't done so, appreciate a like on this video. And let's get straight into this. So I know a lot of people look at the COT reports and they say, oh, it's 1 week old data. Yes, it is 1 week old data that comes out at the close of every Friday and they update this chart. But as you can see, they don't just buy and sell this thing for 1 week. They got to add to their positions, close their positions. This takes weeks to months for them to do this type of stuff, right? This is banks and institutions, millions of dollars running the markets. So it's not just 1 week of data saying, oh, it's 1 week old data. No, it's still really important data because it takes time for them to build a position or to offload their position, right? So where to get this data from? I know a lot of people go to CFTC and this is their homepage that you see. Now, this looks like really ugly format. It just shows you last week's data to this week's data. Now, what these guys have done, I will link it in the description below. It's COT-reports.com, and I'll show you how to get to it. So if we go to the homepage, let's just go to the homepage, and then you're going to see here COT Reports. Hover over this and just go down to simplified version. And this is going to have all your markets right here. All your currency, the dollar, the euro, Aussie, CAD, like all those. Some cryptos, you probably shouldn't pay attention because the banks and institutions really aren't touching crypto. But you have gold, silver, crude oil, and all that. So I'm going to go over this, how to break down this sheet, as well as go over trade reviews, right? So it's quite simple. How to read this, that's what we got to talk about, right? It's a very simple thing to review. Let's just take a photo of this. The only things that I'm really too concerned about is this: long, short, and net position. These are the main things that you're going to be looking at. Are they adding to their shorts, adding to their longs? Are they closing off their longs or closing off their shorts? And what's their overall net position? Because it's a big mistake that people just look at this and they say, oh, they're buying this thing, I should buy. No, because you need to use it in combination with technicals, with fundamentals, and sentiment. This is what you need to create an edge. You can't just look at this and say, oh, they're buying, I buy. Like, no, like you're late to the party, you're getting bad fills, you're not going to be a profitable trader doing this, right? So if we looked at WTI, which is crude oil, you can see here, let's take a photo and let's analyze this. This is the one that we want to look at. And like I said, long positions, short positions, net positions, right? These are the main three columns that you're going to be looking at. What have these guys been doing in crude oil over the last couple of weeks? I mean, you can look here on the net positions. They went from positive 200,000. Now they're down to 109,000, right? They've been adding to their swing short, but they went from 120,000. They added to their short position, adding again to 146, adding again to 155, all the way down to recently all the way down to 190,000 contracts. Well, what is that going to look like on a chart? That's going to look like, let's go here to crude oil. It's going to be selling off, right? I mean, long term, it's been selling off a lot, but especially over the last 4-6 weeks, this thing has been selling off dramatically, right? This is back here, this gigantic rally to the upside. That was a spike due to the Iran, was it Israel and Iran? Like, I can't remember. Like, there's so much stuff going on, but this was this giant spike of the bombings going off. Ever since then, this is when they were, if I look back here at this sheet, these guys were 234,000 long. And ever since then, they've been offloading their position, right? And it's been doing what? Going to the downside. So ideally, I would want to be selling this thing. Right now, I'm going to talk more about this later. We're going to go over what's the current thing doing now. How would I trade this? Because you have to use it in combination. You can't just look at this and join the trend, because now you got to start, projecting where are they going to be taking profits. Hey, we're inside a monthly demand zone, and they've just, maxed out their short position. This is probably where it's going to reverse. Like we look back at corn, you might be thinking, well, why not continue to short this thing? Well, now you want to short this thing after it's fallen from 468,000 contracts now to minus 150. The last time we were down at this level was back here. August, September. Remember August, September when I told you, look, these guys were max short position and this is when they started buying? Okay, well, it's probably not a smart idea. It's trying to sell this thing now, right? Instead, all right, maybe we start looking for buying opportunities. Maybe we stop selling this thing, right? We're not in a good location. So I'm going to break down all of this, all right? So let me share with you a couple trade reviews of how I use this in combination with technicals, fundamentals, and these reports, okay? So I got a bunch of trade reviews, and that's how we learn, is through repetition. I don't like it when people only show 1 or 2 examples. I'm gonna go through 7 or 8 examples so that it buries in your brain of, here's another example that they're adding to their shorts and I'm trying to sell this thing. Here's an example of a buy. Here's an example of why I probably shouldn't be in this trade. All right, so let's get into it. We're gonna go over these trade reviews, and then we're gonna go over recent data and how I combine my analysis with what's happening right now, okay? My foot is completely numb. I'm laying on my bed because my desk over here, I'm not sure if you guys can see this, it doesn't have good lighting because I got my window right here. So I'm sitting on my couch, my foot is completely toasted right now. And so I'm just chilling out on my bed. Not that $1 million lifestyle that you see some people living in the villas. That was the goal. The whole goal was to travel and trade around the world, paying $20 a night for my apartment. I can't complain. I'm living it, right? Just the reality. It's the reality. I'd rather, instead of paying $60,000 a year in villas, I would rather pay $10,000 a year staying in nice apartments where I have a giant pool outside, I have a gym, I have my apartment. Anyways, that's a story for a different day. Let's go over some trade reviews. All right, make sure the lighting's good because I just screwed up my camera. All right, there it is. First trade, CAD. This is a trade review from a couple days ago, actually yesterday. And the reason I was looking at shorting this Canadian market is because fundamentally the Canadian economy is not very good. It's not good at all. It's been selling off to the downside. We look long term on this Canadian currency. It's been selling off long term. You look at a monthly chart, weekly chart, this thing has been selling off nonstop. So with prices pulling back into, let's go right here, let me delete this stuff. With prices pulling back into a weekly and monthly level of supply, I love this level for selling opportunities, right? I'm pulling back into a level of supply. I am in a downtrend. I know fundamentally that the Canadian economy and the Canadian dollar is not strong at all. So ideally, I want to start trying to short this thing. So this is the reason that I'm shorting this thing right here. So right here, you can even see here, over the recent couple weeks, where you can see up here, net positions, short and long, right? These are the 3 columns I'm going to be looking at. Over the last couple of weeks, they've been adding to their short positions, right? They went from minus 76,000 down to minus 79, down to minus 90, 93, minus 105,000. So they are heavy short biased overall. And it looks like they're actually adding to their shorts. Second column right here, let me draw on the chart so that you guys can see. Where is this? So you can see at one point they were long, they were short 78,000. They've been adding to their short positions ever since, week after week, right? So where do you think that this market's going to go? To the downside. And they're not even adding to their long positions. They're just leaving it neutral. So this currency is going to go to the downside, which over the last 7 weeks, what has it been doing? It's been selling off to the downside, right? So with combination of fundamentals, sentiment, COT reports, and technical analysis, I want to be looking for selling opportunities, right? And so this is why I ended up selling this thing back up. Prices were pulling back up here into my little daily level of supply. And what I ended up doing was going down to my lower time frame, and I still need my technicals. I still need a nice supply zone, prices selling off hard to the downside, that's taking out opposing zones, breaking trend lines. I need still all that, right? I still need my technicals. I can't just blindly short this thing, okay? And so I've indicated, look, I have a nice little pocket of supply. I have prices pulling back into my level of supply, and I'm selling this thing with sentiment, fundamentals, and technicals. I have an edge here. I have a positive expectancy of this trade, and I just short this thing from right here with my stop loss above this level. And I get out down here before this opposing daily level, which is down here. This is like a daily demand zone. So I'm getting out before that level. You know, just close the trade at like a 1.5 or a 2 to 1. And small risk, $400 profit. Can't complain. All right, so I will take that. Let's go over another one. The Aussie. This is a trade, again, this week that I ended up losing, but prices, as soon as it stopped me out from up here, it did reverse and sold off down here. So my analysis was correct, but my stop loss placement could have been better. So the reason I'm getting short this is because we look here on the Aussie. Let's look here on the Aussie. Fundamentally, not a good economy. The Aussie dollar long-term economically, it's not performing well. It's, as you can see, I mean, it's been selling off since 2012, right? It's been selling off. We've actually just rallied over the last 2-3 months back into an area of monthly supply here. So we're pulling back into a monthly level of supply, which is also a weekly level of supply. I'm pulling back into a monthly supply. I go down to this. You can see that they've been recently adding to the shorts. It's a little bit blurry. I apologize about this. But minus 74,000, minus 81, 78, 80s, minus 100,000, right? So they're selling this thing. They're actually adding to their short positions. So this is why, hey, fundamentally poor performing economy. Dollar is not strong at all. Sentiment-wise, they're adding to their shorts. And technically, we're pulling back into a level of monthly supply, into daily supply over here. And this is my sell setup, right? Very strong supply zone right here. Very strong imbalance to the downside. That's taking out all of this demand, all of this demand, all of this demand. So I'm ending up shorting this thing on the pullback into that supply zone because I have a positive expectancy of this trade. Ended up being a loser. I added notes down here as any trade should. Aussie, the AUD tops GDP expectations. So they released quarterly GDP expectations, which was a positive outlook. It was better than they expected. So it did catch a bid to the upside, which if they come out with quarterly GDP, which comes out every 3 months, and it's better than expected, well, that means it's good for the Aussie dollar. So the Aussie dollar is going to catch a bid, right? Long term, probably different story. But short term, yes, it's going to catch a bid. And then at the same time, later that day, Aussie came out, sorry, not Aussie, the United States came out with JOLTS numbers. And it actually performed worse than expected. So if the dollar is coming out with monthly JOLTS job openings, and it was a lot worse than they expected, well, the United States dollar is going to sell off, which means other currencies across the globe are going to spike up in value because of this, right? So it was kind of a double whammy short term of why this thing caught a bid to the upside. I ended up getting stopped out, but ultimately it did reverse in my favor. I mean, you look here on the 1 hour time frame, it did, from when it stopped me out, it did reverse all the way down here. So that's okay. You know, you're not going to win them all, but that's a trade review. Let's go over another one because we have several more things. Let's look at the euro. Let's look at a buy setup. What has been going on with the euro? So the euro is really interesting. Let's look at this, guys. These guys were minus 68,000. What was this time? I actually don't have the numbers or the dates here. Let's go up here and let's talk about the euro for a second, because let me share with you on this. Great examples I'm going over. You know, people don't go over enough reviews. Everything's about, you know, just give me the sauce, give me the sauce. But then they give you the sauce, but they only give you one example, right? Let's talk about different scenarios. What was price doing during this time period of January 28th, when these guys were net short 66,000 contracts on the euro? Where was prices on the euro January 28th? Let's go to the euro. Let's go to the daily time frame. All the way down here. Look, guys, prices were all the way down here when they were net short the euro, minus 66,000. Ever since then, January 28th, this whole rally started to the upside. Well, what were they doing during this time? Ever since then, they've been offloading their short positions, right? They went from minus 66 into neutral territory into plus 123,000 contracts. If we look here, I probably didn't have to retake this photo because I already have it. Right here, they were short, right, 200,000, and they started offloading their short positions, 220,000 down into selling off, so they're going to be buying this thing. 129, 120s, right? What are they doing at the same time? They're adding to their long positions. They were at long 153,000. And then what were they doing? Adding to their longs down into 206,000. All right? What are they doing? Adding to their longs 248,000. Okay? Selling off their short positions. They really haven't been short. They haven't been selling their short. They've been keeping it neutral. They've been keeping it at like 125,000 this entire time. But during this time, they were actually adding to their short positions, right? Or sorry, adding to their long positions, okay? And so what our price is going to do, it's going to catch a bid to the upside, right? So going back to this trade review, we are adding to our long positions, right? I am trying to buy this thing. Fundamentally, the United States dollar, not good. Donald Trump wants a weak dollar. He wants lower interest rates. So that's not good for the United States dollar. So the dollar is likely to sell off, right? Devaluing the dollar, which would increase the value of other foreign currencies, such as the euro, such as the pound, the CAD, right? So if the dollar is selling off, you're going to see a rally in the euro, okay? And so, like we said, they're buying the euro. They're trying to get out of foreign investment. They're trying to get out of the United States dollar. So they're buying foreign investments in foreign currencies. So I'm buying the euro at this point. And I'm doing the same thing. Uptrend, I got a really nice buy setup right here. Nice demand zone right here. Very strong rally to the upside. Taking out supply, taking out all this supply, and I'm buying the pullback back into that level. Okay, so I guess TP1 was hit up here. And then I guess I got stopped out on TP2 at around break even or small take profits, I'm not too sure. But plus 750, can't complain, right? So that's another trade review. Let's go over a loss because I don't like just looking at losing trades. These are great examples, guys. You're not going to get this. People pay big bucks for these trade reviews, I'm telling you. To analyze, this is what your thought process is. This is not some 18-year-old kid telling you, talking to you about how to read reports and how to trade. Been doing this for like 11, 12 years now. All right. So what are they doing here on this? What is this? Crude oil, right? We've been actually talking about how they were trying to add to their short positions, and that I am trying to, you can see here they were short 116,000. They went to adding to their short 124, 120, 123, up to 146. So I'm thinking like, hey, like they want to continue to short this thing. And so that's why I was looking to get short. And so I actually had a really good sell setup right here. Nice supply zone, breaking momentum, removing opposing pivot point zone, strong and balanced. Ended up being a stop out. I know because I look at this report, I just caught it was a good trade. I just lost. That's fine. When you look at the reports, these guys still went up from 123, 146, 155. They're adding to their short. So I've been right about that direction of crude oil. I was just wrong about that short-term setup, right? So I've still been right about the direction, but my entry was wrong. So maybe I still continue to get short. You know what I mean? Would I want to get short right now? Well, I mean, that's a topic for a different day. I mean, we'll talk about it later, because now you got to start considering, well, now we're pulling back into weekly demand zones. Like, do you really want to be entering long positions down in here, or sorry, short positions in here inside a weekly demand zone? No, like to me, like, no, this is not the time to be, selling this thing. I think you had your time to sell this thing for multiple weeks. Now I wouldn't be looking at selling this thing, right? As in, like, if it's sitting inside that level of demand, I think it would be okay to sell this thing up here or up here. But if it's sitting inside this area of weekly demand, I don't think so, because these are areas that they're looking at taking profit. These are areas that they're looking potentially of getting long now at this point in time. You know what I mean? So it's at that point in time where I probably just want to avoid long positions, right? Then you got to start considering OPEC is increasing production in crude oil, which will increase the supply, right? It's going to have a negative effect on crude oil. Donald Trump wants cheaper oil. If there's a lot of sentiment going around. That's why I've been avoiding crude oil lately, because there's so much noise going on. Like, is there an invasion potentially going on in Venezuela? There's multiple wars going on around the world. One day they're on a truce, and next day they're on a ceasefire. The next day they're going full at it, and the next thing you know, next countries are going at it. It's a market that has a lot of manipulation, crude oil. And so that's why I don't focus on it too much. I more so just look at it. But hey, if sometimes I take trades, they work out. That's my thoughts. Let's talk about the stock market. These are great examples, man. I really appreciate if you guys like this video, right? And this is stuff we do every week in the Moneyball trading program, is looking at the reports every week saying, hey, these reports changed. I like this short. Let's target this short, guys. Hey, we're looking for longs because of this reason here, right? And it's always changing. And for you guys just to learn this from one video, it's very difficult. So that's why it's important to have that, community and a coach like showing you every single week, every single day, like, this is kind of what we're doing. This is why I like this. This is why I don't like this, Russell over here, these guys were short. These guys went from being neutral, minus 4,000, minus 12, minus 30, 39, minus 80,000, adding to their short positions, actually decreasing their long positions, okay? They were also sitting inside a weekly level of supply. So if we actually look here on the Russell, we look here, these guys were sitting at the time here inside weekly level of supply. So I like this level for potential selling opportunities. We go back to this trade review, and I have a really nice kind of short setup right here. Nice little pocket level of supply, strong and balanced to the downside, taking out opposing pivot point zones. This is the same setup that I talked about in like 2 videos ago. I will have it in the description below, talking about the 3 setups I trade, the multiple time frame, the 1 time frame, and the breakout setup. I use those setups in combination with this, right? In combination with, sentiment, fundamentals, and technicals, right? You need it to have an edge. You can't just be looking at, I just wake up every morning, look at the chart on the 1 minute, wait for the fair value gap sweep, and I buy. You're never going to be profitable thinking just like that. You're never going to make it, right? So we went through many trade reviews. What was this one? $900. I mean, same thing. What were these guys doing? Selling off their long positions. Yeah, like these guys were 179,000 long, 176 down to 167, 151. So they're selling the Japanese yen. Nice pocket level of supply right here. Very strong and balanced to the downside. I love that supply. With a nice break in momentum line, selling the pullback back into that level of supply, walk into the bank with $925. Slap that across the cashier's face, you know? Okay, let's talk about like current markets. What are we thinking now? What am I doing? Right? I mean, a lot of those trades were recently over the last 2 weeks, right? And so when I look at like a current market condition, let me see this. Yeah, I mean, we've covered a lot. Let's go over like the euro and a couple of currencies about what's going on right now. So like long term, I believe the euro is going to continue to go up fundamentally because Donald Trump wants a weak dollar. He wants lower interest rates. He wants the stock market to go up. So that's going to inject more money into the stock market, right? So what does that mean for the dollar? The dollar sells off, which means other currencies around the world are probably going to catch a bid, right? So that's why I've been very bullish this euro all year. But recently over the last, multiple weeks, like 4 or 5 weeks, we've been going sideways. Like this is the range that it's been on the daily time frame, because I know people are going to be like, well, how can I day trade this? We're going to talk about that. Because if you come up with this analysis, like looking at the CAD, we'll talk about the CAD next and the Aussie, and about why that's my focus on those types of time frames for day traders, right? When I look at the euro, this thing's been chopping nonstop for like 5 weeks. I haven't touched this thing at all, right? I understand it's sitting inside monthly supply. I understand we have a beautiful confirmation trade set. Like this is a swing short right here for selling the euro, right? But I need to understand if I'm going to be swing shorting the euro, these guys were long 258,000 contracts. Now you might be looking at this thinking like, wow, they're just buying this thing. They went from like all the way from 150s week after week adding to this thing. You should be buying. While I agree with you and long term, it's probably going to catch a bid. The last time that they were this long this is the last, like their max position that they've ever been long is like 268,000 contracts. So if you're coming into levels of when prices are reaching previous max long or max short positions, this is not the time that you want to be buying this thing. The last time that they were this long, they sold all their position, right? They sold a good chunk of it. So this is why like I'm holding off buying the euro, hoping that prices potentially, sell off down here or down into here, right? Into these levels. That would be nice because that's when I see the buyers retaking control. It doesn't mean it can't, right? But that's kind of what's cautiously on my mind right now. These guys are max long. It's the same conversation. Do you remember at the start of this video, we were talking about how on corn, they were 468,000 long, right? What did price do? It sold off from here. Well, it turns out the last time that they were long, the last time that these buyers, really caught in, I meant to say buyers. The last time like these sellers really took control in the bottom from down here, right? This is when the buyers really started to step in again. Do you remember that conversation we had when they were like minus 66,000? Okay, well this is down here. And then they started buying this thing all the way up to 468, selling it off. And now we're getting back into that level of this is when they started buying this thing. So it's not the best time to start selling this thing. Instead, I would start looking at buying this thing at this point, as they're offloading their short positions, taking profit, as they're adding to their longs now potentially. I'd have to look at the report and tell you that if that's true or not, right? So like this is a time that I would start looking for buying opportunities going against the sentiment, because now I'm trading against the sentiment, right? You guys understand that. Like these guys were selling 155,000. Well, why? Well, because now I'm sitting inside a level that last time, this is where they reversed their whole position, right? In fact, they were like short 66,000. Now I'm getting this at minus 155,000. Like, yeah, I'm going to start buying this thing, right? They're going to start offloading their position. So it's the same thing that's going on here in the euro, right? But they're adding to their longs, but they're testing those levels of, hey, we've been adding to our longs for the last couple of weeks and we haven't broken the highs. Like we have not broken these highs at all. And they've been continuing to add a little bit to their longs. But they've also been adding to their shorts because they were short 113,000. Then they went to short 122, 130 to 135. So they're slowly adding to their short positions. And so I would question, it doesn't mean it can't, right? It doesn't mean it can't rally from here. But why would they add up short positions if ultimately they see this thing going up to here? Right? It doesn't mean it can't, right? So news could come out all of a sudden that could drive this market totally, right? So that's why I'm hands off from this market and slightly bearish this market, right? Versus another market like I think the Canadian or the Aussie. Look, we're sitting inside monthly supply. They're adding to their short positions, right? We've talked about this, adding to their shorts. This is why in a market like this, I'm more open to like day trade scalp this thing to the downside if they're selling opportunities. It's the same thing with that CAD. When we talked about the CAD, right? The Canadian dollar, these guys were minus 63,000, set minus 70, minus 105. They're not touching these long positions. They're adding to their shorts. So I'm trying to scalp short. I would rather lower time frame, 1 minute, 5 minute, 15 minute, try to short this thing. You understand what I mean? 1 minute is kind of irrelevant because you're just in and out of position so quickly. But I wouldn't want to be trading against it. I mean, you could definitely buy the Canadian in certain areas. Like, where would I see this thing catching a bid? I mean, realistically, I would see a buyers stepping in down in here. Like, this is an area that, dude, I'm not selling this thing. I'm not selling this thing here at this location. You know, I've been trying to sell this thing for the last couple of weeks and months, right? Which have done very well, but I haven't been buying this thing, you know? And so I would be trying to scalp this thing to the downside, but avoiding these pocket levels of demand. Okay, I think buying in here is totally fine. Just understand that this is a technical edge and you don't really have sentiment, right? So that's how I'm going to be like lower time frame scalping this. Same thing with the Japanese yen, all right? They were adding to their short positions, not touching their long positions. So what have they been doing since they were long right here, 27,000 back in May? Back in April 2024, these guys were short 24,000, long 200,000. They've been slowly decreasing their longs, adding to their short. Not only that, these guys are sitting inside weekly levels of supply. So when I come into my charts, I always draw out my weekly and my monthly levels because these are levels that are going to turn price potentially, right? And so if I see, hey, this thing is now minus 200,000 contracts short, but now we're coming into an area of monthly demand, I might go, oh, whoa. Yeah, shorting's great, but this is probably not the best time to be shorting this thing, right? This is when I'd be hands off, waiting for prices to turn. Oh, honestly, I thought this video was gonna be like 20 minutes, but my gosh, this is money. Like, guys, send this to your friends. Like, they need to understand how this stuff works. Really good stuff, and especially if you're swing trading and that type of stuff, it's a game changer for your swing trades and making sure that you're on the right side of the market, even for day trading, okay? Really important stuff. So we talked about a lot of those markets. There is something else that I wanted to go over. It's so important to have an edge in your trading. Like last week, I actually talked about trading psychology. It was an hour-long video. It got like 900 views, which is expected because you're talking about trading psychology. That's why you don't see videos on YouTube talking about psychology, because nobody wants to watch it, right? But it's like 12 years of trading psychology, getting over all your issues and how to get over it. I recommend that video. But what I was talking about is creating an edge in the market. And you can't just rely off of technicals. You can't just rely off of just core. I mean, you can, but your edge is going to be a lot smaller, right? But in order to create a larger edge, you need to have technicals, right? Which would be your core strategy, indicators, price action, right? Supply and demand. Talking about my confirmation price inside higher time frame levels. I got confirmation. These are strong quality zones. You know what I mean? And then I have sentiment reports, right? Which is like COT reports we've been talking about, geopolitical events, wars, trade deals, right? That type of stuff. And then you also have fundamentals that you have to consider, because the fundamentals are going to be driving price in this direction, the long term. Okay, you understand, like the GDP, the monthly data, the CPI, retail sales, these are the economic news that drive market, not only for the day, like they drive it for the day, but these news, if it's constantly coming out poor for economy, that dollar is not going to be strong. And so when you start lining it up saying, hey, we're sitting inside monthly supply, these guys are max long positions, they're starting to add to their shorts, fundamental news are not strong, you have a much larger edge than if you're just strictly trading technicals, right? And this is stuff that we talk about in the program, talking every single day about just like trade ideas or watch lists. This guy, Tress, taking a short on gold. Okay, it's not loading. There we go. Taking a short on gold, sitting inside a 1 hour supply zone, standard confirmation, right? I like something like that. What was this short? Silver. Oh, so he's selling silver. All right. Oh, that's a great example. Oh, he didn't go over. Silver, right? Because silver is an example of, we're actually sitting inside silver because they haven't been buying this thing. They were up to 80,000, but they went down to 71, 66, 60, 68, right? And what has price been doing? It's actually been skyrocketing to the upside. We're going to get this data that happened over this week. So if you look back on Saturday and you look at the reports, you're going to know what happened in this rally from last week, from the prior week, right? I think so. Friday. You're going to know from the rally from down here. Like the report is going to have from the rally from down here up, right? Halfway up this rally is the data that we're going to have, I believe. But now we're sitting inside a level of weekly supply. So like this is a level that people might be thinking, oh, we should buy this thing. Like long term, I believe, yes, it's going to go up. Yeah, long term, but not at this price sitting inside a weekly level of supply. And so this is why we were saying like, look, I kind of like this level for selling opportunities. And we were talking about how, hey, look, we have like a pretty nice supply zone right here sitting inside this confirmation 1 hour supply zone, breaking structure to the upside, taking out pivot points. And we were talking about this 5-minute confirmation. Damn, this thing worked like a charm, eh? Right, sitting inside this level. Right, this is going to go against the reports, but this is how we can project potentially. Look, we're sitting inside weekly supply. This is a time that they're looking to take profits on their long positions. This thing is potentially overextended. You know what I mean? And so that's why it's been, maybe more of my focus this week at looking at shorts. And I guess that was the short that he took. Yeah, I think it's a fantastic level. 5-minute short entry. Yeah, it's great. Great trade review. Right? Yeah, I love that. So that's awesome job. Awesome job to Alan. He's killing it. And that's what we try to do in the program is creating an edge, right? You need an edge. And these guys are serious traders looking to just make a second or first stream of income from trading using a combination of technicals, fundamentals, and sentiment reports, right? We work directly. The whole goal is to create profitable traders in 90 days or less. I would love to have you guys part of the team, right? We have our 2x weekly coaching calls every Sunday and Wednesday that go over the market prep, going over the COT reports, looking at the charts, going over people's trade reviews, saying what I like and what I don't like. Do you actually have a positive expectant edge on a trade setup? Is there any issues that you're struggling with in your trading? Let's talk about it, right? So I'm really hands-on coach. That's something I pride myself on. And that's what I think a lot of traders need rather than just being another number in another group. So I'd love to have you part of the team to join the Moneyball Trading Program. That will be in the description below. The links to this, everything I mentioned, will be in the description below. I appreciate if you guys like this video. Subscribe, and you can always reach out to me on social media at Moneyball Austin. If you would like to know the 3 setups that I trade every single day, I uploaded a video on this a couple weeks ago. I talked about them in this video. That will be above my head right now. I will see you guys in the next one. Cheers. Bye-bye.